CAK Murugesan to welcome the gathering.
Thank you, Sendil. Good evening, members. On behalf of Management Committee of Tirupur branch of SARC of ICI, I welcome our today's speaker, CA Jomon Case, past chairman SARC. Warm welcome you, sir. And also I welcome all our members for this CP seminar on audit of private limited companies. Welcome you, members. This seminar is very useful because now the CARWA audit was changed. So this seminar was very useful. Thank you. Thank you, sir.
Thank you, Chairman. Members, today we are having the speaker who was past chairman of SARC of ICA, Jomon K. Charge FCA. He is fellow member of our institute with 29 years of diversified practice experience. He was the chairman of Southern India Regional Council of our CA Institute for the year 2019-20. He is founder and managing partner of JVR and Associates, an eight partner firm specializing in corporate audits and consultancy. He is a mentor, Philip M. Macmillan Wood, a multidisciplinary accounting and consulting firm based in Dubai. He is the faculty for auditing at the Institute of Chartered Accountants of India, has taught more than 10,000 CA students. He is a regular resource person on professional circuit on accounting and auditing standards and corporate audit, has done more than 900 presentations. He is also a peer review trainer. He was member of auditing and assurance standard boards of ICA. He was the chairman of ICA Ernakulam branch in the year 2002 and 3. He was traveled extensively in the UK, Middle East and the Far East. He was past president of Rotary Cochin Central and a member of various social clubs, Honorable Secretary of Kerala Management Association. He authored a book, Trails, Reflection of Personal and Professional Life, released in February 2021. He is the member of advisory board, St. Theresa's College, Ernakulam. So with these great words, I request our SARC past chairman, CA Jomon K. Charge sir, to address our members on the topic audit of private limited companies. Please, sir.
Thank you. Good evening to all of you. I hope I am audible and clear.
Yes, sir.
Yes. The dynamic chairman of the Tirupur branch, CAK Murugesan, Senthil Kumar, Chartered Accountant, who has been instrumental in me being with you this evening, is in charge of CP activities, I understand. Other managing committee members of the Tirupur branch, invited guests and friends. I'm extremely delighted to stand before you virtually, or rather sit before you virtually this evening, and to be part of this empowerment program on audit of private limited companies with a certain thrust on accounting standards and standards in auditing, both being mandatory under the Companies Act as well as under the institute regulations. As the chairman rightly pointed out, we are standing at the threshold of the audit season, ensuing audit season. It should have started a little earlier, probably after bank audit in April. Mid of May, we would have started some of the private limited company audits. Some of us have already completed listed company audits and large companies, tech companies where work from home and remote taxes audits are all really practical. And for vast majority of our clients, Tirupur, Cochin, smaller towns like ours, we have medium-sized private limited companies for whom the audit aspects are very, very important. And we today live in a very dynamic environment. The Companies Act is still evolving, as you know, for the sake of enhancing ease of doing business. The Companies Act is getting decriminalized. Changes are happening. And since there are a lot of corporate failures and bank-related irregularities, the Schedule 5 is being amended. Schedule 3 has been amended. A new CARO is falling into place. That is not part of our discussion today. I'll tell you why in the next couple of minutes as we go by. So with all that, this is the right time. I'm happy that the Tirupur branch has decided to organize the program on audit of private limited companies. And a big thank you for inviting me to be the speaker for this evening. Tirupur, I have come so many times during my chairmanship. And of course, we have a lot of good friends there. And Tirupur has a lot of activity. Kerala has a connect to Tirupur. A lot of our Kerala units, including branch like B-Star are having units there, outsourcing a lot of work to Tirupur. And I've come 3-4 times to Tirupur. We get back with a lot of T-shirts and kids wear and things like that, and a lot of things. And I still remember the conference of, unfortunate to use that term, late Kandasamy sir, who was a great friend of all of us, great friend of mine. I still remember the conference when I was a much younger member many years back, and the very pleasant taste of the second day biryani still lingers on. So pleasant memories about Tirupur. Happy to be back. So if it was not for COVID, I would have been physically present there. So I'm extremely happy, and thank you, Senthil and Murugesh sir, for inviting me. So with this introduction, wishing you a happy learning, effective learning in the next 1.5 hours or so, depending on your mood and the resources we have on hand. We will discuss, threadbare will discuss the basic provisions relating to audit of private limited companies. I would be happy to have a lot of questions either through the chat box or probably we have a Q&A at the end of the session. I will try to answer those questions with the knowledge I have on company audits. And this sphere is something which there are a lot of loose ends. I would say that members, there's a feeling on the part of the regulator, whether when you meet the registrar of companies or the RD or even the regulatory aspects when come to, there's a general feeling that members or chartered accountants and corporates both are not doing their work properly to live up to the spirit of the law, spirit of disclosures, spirit of complying with standards or rather generally accepted accounting principles. So let us gear up. I hope this presentation would throw some light and give some fresh perspective to the approach to company audit. So with that introduction, with your permission, let me try to share my slide. Is it visible on a full screen now?
Yes, sir.
Yes, sir.
Right. Okay. Thank you very much. So as we have discussed, let's start from the basics. The key aspects of audit, any audit, and audit of private limited companies is no different, is for ensuring a true and fair view of financial information, which is presented before a multiplicity of users. We call them stakeholders now. It could be the shareholders, it could be the financial institutions, it would be the government and the governmental departments, income tax, GST, or that the basis for tax assessment today is audited financial statements. In our tax computation, for example, we start by saying net profit as per the P&L account. And the P&L account has to be prepared for a private limited company in accordance with the provisions of the Companies Act, accounting standards, all that is familiar, we are familiar with that. Another aspect which is very important when it comes to the very important aspect of private limited company audits is to have the proper presentations and disclosures. Why I am saying this is that the Financial Reporting Review Board, which primarily evaluates listed company audit reports or annual reports, and also where the findings, even at that sphere, at that level, the compliance levels are very poor. So we have to fully comply with the Schedule 3. Disclosure requirements have to be given in the notes on accounts. That's some key aspect of the audit. It is to be primarily done by the management. It is to be primarily done by the management. I agree. But we sometimes, not sometimes, most of the times we step into the shoes of the management and say that, okay, we help them prepare financial statements and so on. This has become a regular. This is not different. That's Tirupur, Cochin, Chennai, Mumbai, London, New York. The auditors or the public accountants, as I say, public accountants, as I say, helping the corporate, small corporates to prepare financial statements as part of the audit is not a new thing. But under the new Code of Ethics, I hope you're clear that under Code of Ethics, we have to be very clear that we cannot make it very explicit. If at all we are doing that, it has to be, I wouldn't say in hiding, but it has to be a little discreet and judiciously done. We cannot make it very open. The third important aspect, I think one of the very important aspects of audit of private limited companies is to ensure that there is accounting standard compliance. How is that the inventory is valued? AS2, how is that you are stating the fixed assets? AS10, or the standard is now called property, plant and equipment. What is your treatment of the intangible assets, AS26? How do you deal with deferred taxation, AS 22? I'm just giving a few examples. How do you deal with borrowing costs if there are multiple multi-rate borrowings and which is being applied for acquiring various type of assets, qualifying and non-qualifying assets? The lot of technicalities which we will try to explain in the simplest possible fashion. Simplest not because awareness is poor, but we will make it a little interesting, avoiding technical jargon, and we'll speak in a language which is palatable for every one of us. We may have young members in the group. I'm seeing about how many members are there now? About 40 members. That's a good attendance for a branch like Tirupur. I hope more members would join in. My only request to the branch is that when we organize programs of this sort, you may also publicize this amongst final students. They have come back after the exams. Final students you can publicize because they are our field marshals. They are the people who are doing the audit, and therefore that perspective is also fine. And we don't have to charge them also. Today, the branch does not incur much of a cost. If I was to travel to Tirupur, you would probably pay my travel, which I never used to charge a branch. So you have to pay for my travel. You would give me a multicolor or very, very colorful ponada or the shawl. Then you would give me a memento. No, we are saving on all that. And the members have to be given coffee, tea. I mean, it's all pleasant. We should get back to that. It's very important that post-COVID, we should start meeting physically, and essentially we should do that. Satya Nadella famously said, this cannot be a permanent feature, and we cannot burn the social capital we built over many years. The meeting in office, the office gossip, the pleasantries we have, evening get-togethers, all that has to come back, and that hopefully Kerala would also reach a level where we would. I'm not being state-specific as SARC chairman. Now aspiring to serve at the next level. I'm not state specific. I'm only talking in the COVID background that we are having a lot of problems. Offline, we were discussing with chairman, Senthil, all of them, that we are having, I think Kerala became too complacent. So let's not stray from the point here. Accounting standard compliance is very, very important. And finally, informed reporting. The auditor's report is a medium through which the opinion is conveyed. A well-meaning researcher, or today, let's talk about many of our young boys and girls who qualified are working for investment banking companies. It could be an Avendus, it could be a Bain Capital, it could be anyone who would be working with the investing bankers. They would say that, okay, let's look at whether there are major reservations, audit qualifications in the report. Therefore, in the reporting, we have the main body of the report, then the internal financial controls for certain companies we'll see, and most importantly, on the propriety aspects of the company's functioning. Apart from just true and fair, we have the CARO for quite some time. We had Mao CARO, which became CARO, and we're still living in the CARO 2016 regime. Let me make, when we talk about presentation disclosure and CARO, let me make it very clear that this discussion, audit of private limited companies, let us say that this is for the financial year 2021, which we are about to start, but we are in the financial year 21-22. So for financial year 2021 audits, the recent amendment which has come to Schedule 3, revised to Schedule 3, as well as CARO 2020 are not applicable. I repeat, revised CARO 2020 and amended Schedule 3 are not applicable for financial year 2021. I hope I made the point clear. Am I clear, sir? Is it going okay?
Yes, sir.
Yes,
Yes,
sir.
sir. Yes, sir. It's clear, sir.
Okay, great. So this is the report. So these are the key aspects starting towards ensuring true and fair. We would make sure that there are all pleasant presentations and disclosure requirements are met, and accounting standards are complied with. And what are the rules for doing an audit? If I may ask the younger members, what are the rules or the instruction manual for doing an audit is found in the form of standards on auditing. That's also very, very important. And today the organizing team, chairman and the entire managing committee would agree with me when I say that it is not without reason that the Central Council has made 2 topics mandatory. Senthil sir, we have standards on auditing and a code of ethics.
Okay, sir.
Because standards on auditing, the level of compliance is very poor. Many of us still do not have an audit program. Towards the end of the presentation, we will try to discuss a little bit on that, and probably we'll make it something like a interactive session or so as we go by. See, this is a very unfortunate statement made by former MCA Secretary, Mr. Injetti Srinivas. Talking about the issues in IL&FS, a lot of corporate failures where audit aspects or rather audit-related matters were also not found to be in place, or rather the auditors had not exercised. What we used to say in the first class on auditing, what we used to learn, the auditors failed to collect sufficient appropriate evidence, as also did not seek the required explanations on matters which are of importance to form an opinion on the financial statements. IL&FS, 92,000 crore regulatory. Again, putting corporate India to shame and putting India to shame before the global players. So we do not expect the auditors to find the needle in the haystack. Haystack is common for Kerala and Tamil Nadu. Whoever has cattle or or in the farms, we have the hay after the harvest season. We have the hay stacked up on a haystack, probably on a tree or on a big pole-like thing, and then we pull out as it's required for the bullocks or the cows we have at home. So, but then you don't have to find a needle in a haystack. That kind of fine, deep dives investigation you have to find out. But the auditors must actually see the elephant in the room. So this is something which has come for as a warning or a shameful remark. Moving on, this is what our friend Mohan R. Levy said. I have 3 slides to explain the backdrop, or rather the approach with which we should do company audits, at least from now on. Clinging on to the judgment in Kingston Cotton Mills case, delivered in 1896 as an insurance policy, is not advisable anymore. So the auditors, when they are not probably able to do, or rather doing the work it should be done, doing something, or rather not doing the way it should be done. They say that Kingston Cotton Mills case, there was a decision that the auditor is only watchdog, not a blood down. To that, Amarjit Chopra sir, who is a past president of our institute, who is very vocal on issues concerning professional matters, he said, auditors cannot just be watchdogs, at least be barking dogs. If you do not blow the whistle, it might be taken away. And if you do not, yesterday, Patabi, there was a session in Kerala, we are having Navaratna conference, 9 days program. Patabiram sir was saying that, if you do not blow your trumpet, who else will blow the trumpet? So the auditor, if you look at standards like SA 240, the auditor has a responsibility to go beyond the shareholders. If there are irregularities and frauds of a high magnitude or high intensity, he should, alert the regulator also, going beyond the shareholders. Though it is slightly outside the scope of an audit, in the sake of national interest or public interest should not be jeopardized. Therefore, that is a level of demand which is there on the auditor. Now we will become more specific. We'll start with what is new or what is recently changed. Now today, if you see under the Companies Act, even for private limited companies, majority of them, cash flow statements are part of general purpose financial statements. Included in the definition of financial statements under subsection 2, subsection 40. 2, subsection 40 defines financial statements to include balance sheet, P&L or income and expenditure, cash flow statements, and SOSE, statement of changes in equity. SOSE is not yet notified, but under India, some of you, for larger companies in Tirupur, you might be in the India's regime, you would be doing it. So under India, SOSE is required, but for private limited companies who are under the Schedule 3, Part 1 or Division 1, is not required to comply with that. So cash flow statements are part of general purpose financial statement, which means that all private limited companies, there are certain exceptions which we will see, have to prepare cash flow statements. Schedule 3, this is not the new format. I'm not talking about the recent revision, which has been there for some time. So Schedule 3 format has to be kept in mind, because we always talk about substance over form, but then the legal form is also very, very important. Depreciation, all of us know, for quite some time now, with Schedule 2 replacing Schedule 14 under the Companies Act 1956. Schedule 2 gives the indicative useful lives for depreciation of various fixed assets. You are at liberty to use different rates also based on technical evaluation. And there are no arbitrary rates as of now, like in the old Schedule 14. Companies Accounting Standards Amendment Rules 2016. In fact, when Sandil sir called me, I suggested we'll do a program on accounting standards. And he said it has already been covered. But then any discussion on audit of private companies cannot be complete with a So Companies Accounting Standards Rules, Amendment Rules 2016. Sir, am I audible? Is there a disruption? Any disturbance?
Audible, sir. Audible, sir.
Oh, thank you. Okay. Companies Accounting Standards Amendment Rules, the changes we'll see. One example for a quick recall, I would say that we do not have a standard on depreciation now after this amendment. AS 6 dealing with depreciation has been withdrawn. It is now blended with Accounting Standard 10, which is also been renamed. It was called Accounting for Fixed Assets. Now AS 10 is called Property, Plant and Equipment. And paragraph 40 to 60 of that standard AS 10 now deals with depreciation. So that AS 6 is withdrawn. There are a lot of changes which we'll discuss when we come to that relevant area of this particular presentation. Ind AS has been made applicable for certain companies. Okay. Majority of our clients have not fallen into the Ind AS regime. Net worth of 250 crore or more. Listed companies and all companies with net worth of 250 crore or more only are required to comply with Ind AS. We have a separate slide. We'll discuss in detail. Auditing standards made mandatory. Again, this is very important. Under 143(9), Section 143 of the Companies Act deals with powers and duties of auditors and auditing standards. Powers and duties of auditors and auditing standards. So they are mandatory under the Companies Act. One single line, but very demanding, very challenging for the profession. For everyone who signs the dotted line. The attestation function that we do. Every auditor, not every company, not every director, every auditor shall comply with auditing standards. But we are still not geared up. But let us not forget that we have a regulatory mechanism, a disciplinary mechanism, which is substantially more stringent and stronger, more, I would say, intense, more, I would say, taxing, like DC mechanism of the institute, plus NAFRA, NFR. NFR is gaining strong footing. In the IL&FS case where I mentioned, they have slashed penalties to the extent of 25 lakhs. And debarred two of the partners, serving partners and one ex-partner of a multinational Big Four firm for a period of 7 years or so. They have appealed before the Gujarat's High Court. The matter, I think, is sub judice, so that is how things are. CARO 2016 is not very new, but reporting under CARO 26 has to be substantially more informed reporting. It should not be seen as a questionnaire. It should not be a copy-paste from the previous year where we change only the year and the date. It should not be. Some more thought has to be applied into CARO 26. The new format of the auditor's report, read with the 700 also, standard on auditing 700. There are a lot of new reporting requirements under the Companies Act 2013 under 143. We'll see in the next few slides. Another thing is fraud reporting. See, the greed and self-interest is mounting day after day. It is not getting settled. Mahatma Gandhi famously said the earth has got everything for every man's need, but not for every man's greed. In the sphere of public finance or accounting and the world that we live in also, but the corporates or even some professionals, that frauds are on the increase. For whatever reason, maybe the value system has taken a beating. There's a lot of dent on the value system. Everyone wants to make quick money. No patience to wait like the previous generation. Life on a fast lane. There are a lot of issues. So fraud reporting is specific under 143.12, and there are penalties for failing to report on fraud. That brings us to the audit process. Very, very basic process. I think the senior members and all of you, I think for that matter, should bear with me for discussing this. But sir, why I am saying this is because the audit function mostly reduced to compilation of financial statements. That also mostly for the simple purpose of filing tax returns. Plus, if you have bank facility, the banker wants audited financial statements. Therefore, many of the basic audit considerations, I did my articles with Varma and Varma, a Kerala-based firm, the office in Chennai, 88 to 91, I did my articles. I would always consider those 3 years to be one of the best days of my life in me becoming a chartered accountant, and my grooming there really helped me improve on various counts. And also, I had my share of problems. I was a little homesick when I moved away from the safe harbors of home and parents and to a challenging environment where, students were in a different culture. In my village, in those days, if someone says that I'm doing CA, that itself was rated high. To do CA itself was very, very highly rated. But when to Chennai, when I tell someone that I'm doing CA, the next question was, what else? அது கூட CW இருக்கா இல்ல CS ஏதாவது இருக்கா அந்த மாதிரி questions. So I had my share of troubles, but thank God I could get over that. And now Chennai is second home for me. And so many years later, year before last, with your good wishes and blessings, I could become the chairman of the region. So sitting in the SRC chairman's cabin and sometimes looking down on the Nungombakam High Road, or staying in Hyatt Hotel and Anna Sale, the vehicles passing by night, I used to, thank God and then recall with so much of satisfaction my day. Am I audible now?
Yes, sir. Audible.
I think there's a problem with the connectivity. Let me try share my screen again. Are we back to the same slide? Is it okay for you?
Yes, sir. It is an audit process.
Okay, fine. Yeah. So communicating to those charged with governance. Yeah. 1 minute, sir. 1 minute. Yes, sir. Sorry for that. Vouching again. You may think that I'm taking a class on auditing. Even if it's that way, it really helps if this conveys a strong message that these basics of accounting, or rather audit process, should not be left out. Vouching as details of transactions. Our former president Y.H. Mallegam, when he came for if I remember correctly, 96-97 conference, when Mr. M.C. Joseph was SRC chairman, he made a statement. At that point of time, computers were making, information technology was making deep inroads into many of our areas. It was helping one way, making our job easy. But then that time he made a statement that talking too much about technology, we are leaving out details of transactions. So as auditors, are we doing this, just talking about technology and saying that, okay, a system generated trial balance is quite divine. There's a lot of sanctity attached to it, but then there could be inherent issues. So all this we have to do: ledger analysis, analyzing the ledger accounts, because the audit methodologies would have changed. Even a remote audit, the audit objective remains the same. The purpose of the audit remains the same for the auditor to express an opinion on the financial statements. Verification of assets, stocks, documents of title, etc. Are we doing it carefully? Are we doing it with the required amount of care and caution? We were appointed by the official liquidator, then OIL of High Court of Kerala, to do an investigation into a company which ran into all kinds of trouble. To being audited by a very senior chartered accountant. He is no more. He died about 3 years back. What I'm talking about is 7 years back we were appointed. And to our great dismay, we found that 18 of the high value properties finding a place in the balance sheet were in the name of the managing director. Even in the address, the company's name was not mentioned. But just by passing a journal entry, land account, debtor to managing directors, loan account or capital account or current account, and then allotting shares, this was there. But company did not have any charge on this. The tax was paid in, no conveyancing was done. The tax was paid in the name of the managing director. And probably when the CARO 2016 was introduced, we have a clause. Specifically, the auditor has to report whether removable properties are registered in the name of the company or not. Not without reason. Some of us have been passive. And stock. What is the biggest issue with the banks today? If we have a lot of rot in the banking system, we have high NPAs, and the banking system is slightly shaky because of the bad loans. And today we have a bad bank formed to take over the bad loans, make the other banks look cleaner, good, better, stronger, healthier. we have a bad bank, that loans have been getting slowly shifted. Where the main issue I'm seeing is that most of this balance sheet of constituents, most of the balance sheets have non-existent stock sitting in there. And the banks think that they are secured with all this stock. Stock may not be there. If at all they are there, they may not have the value which is mentioned in there. They may not be saleable. They may not have the kind of liquidity. All those things can happen. Some of them would have gone obsolete, technological obsolescence. Items with the shelf life, limited shelf life, food products, juices, pharma items, all these things would have expired and then still shown as high value stock. It's not healthy at all. So I think these are processes which we should not forget. Moving on further, this thing, comparing with the financial statements with books of accounts. I just ask you a simple question. This is not fault finding. Just ask you a simple question. We could have made it more interactive if it was physical, but we'll surely have this Q&A. How many of us really obtain a final signed trial balance at a higher level by a finance manager also? Am I sounding very silly saying that trial balance is also old thing? Nowadays, we do not ask for the trial balance, etc. The tally data is with our students. What is today we are discussing in Koilon with some of the senior members. We are talking about data security, confidentiality. The client, even the client does not know. The client's accountant would probably share the tally data with the students. So all the students will have the tally data, and then we make them take an oath of confidentiality. But then it is always we have the personal integrity of the person, all those things, integrity of the person. That's all very important. But then there's a final document based on which financial statements have been prepared. I think it makes sense to collect that and be making it part of the audit notes file. Analytical review, yes. And today when somebody says that, okay, signed balance sheet is signed trial balance is not possible. Fair enough. If the finance manager says that I'm sending the final trial balance, which have been checked and seen by me as under an email, as a covering note, as an attachment to his email, that is fair enough. That is evidence enough. Times are changing, so we do not insist on a hard copy being printed, every page signed with that, but the ownership has to be there for the signed trial balance. It is not the auditor's property. It is not the auditor's responsibility. Therefore, we should pin down their responsibility and make them do that. There will be resistance. You know why? We have been giving them a lot of freedom. We have been taking them for granted. The COVID pronouncements of the institute, the common thread is that professional skepticism should stand amplified. Why should we take trouble for the careless attitude or probably the negligence and the lethargy of the corporate accountant? Well, while I was chairman of the Southern region, I used to go to Chennai almost every week. And DC cases used to be posted at SARC office, disciplinary committee cases. See, a lot of charter accounts, including senior members, young members, for the audit of a small residents association, a flat owners association. Oh my God, we do not take up that assignment. Auditor, because there will be internal fights. In Kerala, this week, the treasurer will be one Mr. Joseph. Next week, it will be one Mr. Nair. After that, 1 week, there will be internal fight. There will be one Rashid, and so on. It goes on the story, and then nobody owns it. And if we do not take up such assignments, and for small things, we are very negligent. We do not have an appointment letter. We have not obtained the evidence. We just got a trial balance, prepared statement, signed it, and okay, fine. Is that enough? Very dangerous, I would say that. We're playing with fire. In this new regulatory environment, one has to be careful. Moving on, analytical review, ratio analysis, trend analysis, industry-based analysis, all those things we have to do. They are all, after taking the draft financial statements, the circles that we circle this, but why is it so? GP was so high, and we compare industry. And today with the Google can give you evidence on everything that you want. So if you want to find an industry average and things like that, it is so easy. The trends are easy. Therefore, we should do that. Accounting standard compliance, I did mention. True and fair cannot happen without compliance with gaps, generally accepted accounting principles, which are our accounting standards. Schedule 3 compliance, information for notes on accounts. Notes on accounts, we have a lot of information to be given. And today, the accounting standards, disclosures, related party disclosures, breakup of earnings per share, breakup of deferred taxation, taxes on income, DTL, all that is to be given in the notes on accounts. Raw material imported indigenous, the basic quantitative information which are given about manufactured goods, raw material consumptions. All that's very important in a manufacturing organization, particularly. We should get those notes and check it properly. If we are helping them, let somebody own it up, and therefore that we have to do. And Caro points, let us do informed reporting. It could be on employee dues, it could be on term loan defaults, it could be on inventory records, so many things. We have to do informed reporting and get all the information. That was about the audit process. Now let us get a little more specific into the disclosure requirements, where we talk about Schedule 3, some of the salient features or important points which we have to keep in mind with the Schedule 3 is that current and non-current distinction is based on operating cycle rather. What is this current non-current distinction? We were all trained and we were all doing this. Every sundry debtor, every receivable is a current asset. And every trade payable is a current liability. Not anymore. With the Schedule 3, it says that if there is a contractual agreement to give a deferred credit to a customer, he needs to pay only after 18 months. Then that part of the amount which is falling beyond the 12 months period from the balance sheet date is a non-current asset. Similarly, your supplier is giving you 14 months credit instead of 12 months credit. So what is not falling within 12 months from the date of the balance sheet is a non-current portion of the trade payables. This has to be clearly understood. This is about the finest and finest presentation of financial statements. Debit balance of statement of profit and loss. We don't call it P&L account anymore. Statement of profit and loss should be shown as a negative figure under the head surplus. Under reserves and surplus, it's under surplus, you have to show as a bracketed item. Earlier on, we used to have it as a last item, bottommost item in the balance sheet, in the balance sheet. That is not there as a bracketed item. And the period and amount of continuing default as on the balance sheet date, in the case of loans, have to be clearly disclosed. Interest, loans and interest has to be. This is more from a banker's perspective, but here there's a very specific reporting requirement on the part of the Schedule 3 is whose property? Schedule 3 is the management's property. Therefore, we should comply with that. Share application money, another thing which has been playing around for quite some time. Share application money, refundable, shall be shown under the subheading other current liabilities. And you have 60 days time. If an allotment date is fixed, if it's not allotted within 60 days, within 15 days, altogether 75 days we have, it has to be refunded to the applicants, failing which it will acquire the character of a deposit. And I don't have to tell you the high penalties which are under Chapter 5 dealing with deposits. So one has to be extremely careful in dealing with share application money, pending allotment. Before the Companies Act 2013 I have a chartered account friend in Kottayam. Many of you know Kottayam because you would have passed through Kottayam while you are on a pilgrimage to Shabarimala. I belong to Kottayam district. My hometown is Pala, where also there's a famous Shiva temple called the Kadapattur Kshetram, and where a lot of devotees from other states, Tamil Nadu, Karnataka, they used to come and stay. We had a flowing river with the flowing clean water. Nowadays it's not that as much. So it was an idattavalam for the Ayyappa devotees, Ayyappas to come and stay there overnight, take a break, and early morning we have a freshwater bath in the flowing river, and all those things used to be there. So where did I say from? So this Kottayam friend was saying his father was a chartered accountant, his grandfather was also a chartered accountant. He said, my Appappa saw share money advance spending allotment, my Appa saw share money advance spending allotment, and I was also seeing share money pending allotment in the balance sheet of some of our clients. One of the reasons for parking it there was to play around with the taxman. If you show it as a loan, you have the issue of 269 SS, etc. And therefore, this was being shown. No more possible. They have to be allotted or they have to shift it to current liabilities, and it's dangerous to show it like that because it will acquire the character of a deposit. This is on materiality. Any item of income or expense which exceeds 1% of the revenue from operations or 1 lakh, whichever is higher, needs to be disclosed separately. This is for P&L. Any item of income or expenditure which exceeds. It should not be shown under sundry expenses, general charges, miscellaneous expenses, or miscellaneous income. It should not be shown. If the the quantum is so much, then you should do it separately. Now we will come to some of the specific points we discussed in the initial slides. Cash flow statements. All companies, public, private, all of them, all companies except small startups as defined in DIPP, dormant and OPCs must prepare cash flow statements. Cash flow statement, if it is there, the auditor should also comment on the cash flow statements. Auditors reportedly, we have to add one more line that gives a true and fair view of the cash flow statement. We have examined the balance sheet, P&L, cash flow, etc. And on base, we in the opinion, we say that gives a true and fair view of the state of affairs through the balance sheet, profit or loss through the P&L account, cash flows through the cash flow statement. This is something which one should keep in mind. And today, if you are advising businesses, if one area which is in the last few years I have taken up, I will take a 2 minutes detour from the topic because I think it's quite relevant. I stopped my tax. I start me doing tax practice or tax representations about 12 years back. After developing a team of partners, I have 4 partners in my Cochin office. All of them were my students. Now they are partners. Each one, thank God, touchwood, they are pillars of the organization. I have the flexibility to travel, meet around institutes, work, do my academics. I have the flexibility. That's a model which we have created. And all these, all the 4 of them are managing one vertical. The audit partner in charge, the partner in charge of audit and assurance does not know how to form a company because he cannot complain. Once in a discussion, he said, is that not a weakness that I cannot incorporate a company? I said, it is like a cardiologist complaining that I cannot treat a toothache. Okay, that's the way specialization has to happen. So I moved out and I'm now more into business advisory services and of course, we say that system study, we have a vertical which we call it as corporate doctor. And we do all that. Apart from the P&L, balance sheet, profitability, etc., we also advise them, or rather the presentations in helping them develop sensible MIS, etc. Medium-sized organizations, not very small. Now we are working on streamlining a large NBFC in Kerala. Their concurrent audit function, their internal audit function, their IT transition, we are supporting them. We need a big team. We have put a 15-member team on partners in charge. Very challenging assignment, at the same time very rewarding as well. Exciting also, the changes that are happening and new findings, people getting fired, all those things are happening. So why I'm trying to say this is because some of our conventional areas, like tax audit, we have problem, GST audit is faded out. Newer areas we have to find out. So whatever brings value addition to the client is willing to pay. So in a system study that we do in helping them have the right organizational structure, right organizational mix, MIS, organizing monthly meetings, helping them even say that this has to be formal in the boardroom. Let's have a bottle of mineral water, a clean glass, a writing pad, a sharp pencil, some cashew and coffee, all that, of formalizing some of those practices, getting them get to the next level. The client is willing to pay, much more lucrative than the conventional audits that we do. They're all, in all those assignments, we put a lot of thrust on cash flow. While I'm saying this, I have a slide towards the end, which would be very interesting for all of you. So this is a cash flow statement. So do not forget, for all companies, small startup, other than small startup and dormants and OPCs have to prepare cash flow statement. Schedule 2, we have discussed on depreciation. It gives a detailed list of assets and useful lives. Based on that, we have to work out what are the rates which are going to apply. And the Google will help you. You don't have to reinvent the wheel, just Google up and find out. All those things are readily available. And I think by this time it is settled into our system. Rates are not arbitrary. There are 2 questions which are, and for intangible assets. For intangible assets per se, they have not given useful lives. They have asked us to refer to AS 26. We are going to see that in detail. There's a rebuttable presumption that the useful life of an intangible asset will not exceed 10 years. If it is computer software, it is 5 years. So there it is. Schedule 2 does not deal with the amortization rates or useful lives of intangible assets. Now, two questions. One, when we say that residual value is fixed at 5%, it is largely arbitrary. It is indicative. If we ask these questions, can I have a different useful life than what is given in Schedule 2? Can I say that my asset does not have any residual value? It is not for the finance manager. It's not for the auditor to say. Both are possible based on technical evaluation. Infosys annual report year before last, the 1920 annual report of Infosys had disclosed this like a textbook case, because 4 of the assets they have listed there, they had adopted a rate, probably the useful life which was different from, which was lesser than the useful life given in Schedule 2. And as a footnote they had given that the management feels that the useful life shown above best represent the real useful lives, and this is based on technical evaluation. Very well said. So that's the point I'm trying to drive home in this particular slide. Accounting standards, my dear colleagues, we have today, we are living in this discussion, in this slide, we are not discussing about Ind AS. Accounting standards, we have 27 standards, but I call them 29 minus 2 because 2 have been withdrawn, but they have not been renumbered. One way it is better not to renumber. We'll get confused. Every time there is a withdrawal, standard numbers will change. Accounting standard 1, disclosure of accounting policies. Accounting standard 29, provisions, contingent liabilities, and contingent assets. In between there are standards. I think we'll do a run through a little later in this presentation. In that, one major change which has happened is Companies Accounting Standards Rules 2016. Of course, all things started off with Companies Accounting Standards Rules 2006. We'll discuss that in the next few slides. Companies Accounting Standards Rules 2006 brought out the concept of, defined the concept of a small and medium company to give partial or complete relaxations or exemptions to smaller companies from applying the technically complicated accounting standards. So who is a small and medium company? This definition is very important. Now we are discussing only private limited companies. Any thought on non-company entities? Please let us not discuss that now. Time permits towards the end. I have recently made a presentation and shared by email to many of you. Maybe it have gone into spam also. Do check. There's a completely different presentation on accounting standards for non-company entities. I had done that presentation for a few branches in Andhra Pradesh and Telangana, which was very well received. Did some because the March 21 journal, if I remember correctly, March or April 21 journal of ICA has got complete details where it is not a small and medium company. It is talk about level 1, level 2, level 3, level 4 entities, non-company entities, the applicability of accounting standards. Here we are talking about, in this discussion in the next 5 to 10 minutes, we are going to discuss the applicability of accounting standards for companies. In that, if you are a small and medium company, as defined in accounting standard rules, yeah, okay. I think there's some connectivity issue in between. I will just share a slide in between. I'm sitting in a hotel room in Kollam. Is the slide visible?
Yes, sir. Yes, sir.
Yes, okay. It's not a bank, financial institution, or insurance company. Its turnover does not exceed 250 crores in the previous year, and its borrowings does not exceed 10 crores at any time during the previous year. Please note, this is with reference to previous year. So 2021 audit பண்ணும்போது what we have to see is 1920 the FY 1920 FY, whether your turnover has exceeded 50 crores or your borrowings have exceeded 10 crores at any point of time during the previous year. Lastly, look at that point. One has to be careful. It is not a holding or subsidiary of a non-SMC. My client or your client is a small private limited company in Cochin or Tirupur. Okay. But it's a subsidiary of a larger company in Chennai or Bangalore or Mumbai. That company is a non-SMC, big company. They are not using the term big company or large company. They said This is an SMC. The other one, which are beyond this, large companies are called non-SMCs. Or you are either a subsidiary or you are primarily an investment company in which you have a subsidiary which has grown bigger than you, which will become a non-SMC. In that case also, you will become you will not be an SMC, you will also be a non-SMC. The cardinal principle when it comes to compliance with accounting standards is 29-2 standards applicability is all the standards in toto, in entirety, without any relaxation or exemption, are applicable to non-SMCs, large companies. If your turnover is more than 50 crores, if your borrowing is more than 10 crores, you are an insurance company, you are a listed company, etc., all the standards, there are no exemptions, no relaxations. But when it comes to SMCs, 17, 23, 25, and 27 are not applicable to SMCs. I will tell you which are those standards. The standards which are dealing with that, in fact, there's a chart kind of a form, which probably I'll share with the branch. You can circulate with the members. Accounting standard 17 is segment reporting, not applicable for SMCs. 23 is accounting for investments in associates, not applicable. AS 25 is interim financial reporting, not applicable for SMCs. 27 is reporting, financial reporting of interest in joint ventures. So these 4 standards, there's a total exemption for small and medium companies. They need not comply with these 4 standards. But consolidation, look at AS 27, even when a small and medium company, if you are in a chain of holding subsidiary, etc., AS 21 would still apply, relevant. But there are certain partial exemptions, which I think I will be covering in the next few slides. In case, let me see if it is not there. Okay, major changes. Okay, if it's not there, I'll tell you, for example, AS 20 earnings per share. If you're a small and medium company, you don't have to calculate and disclose diluted earnings per share. Basic earnings per share, even a very small company, they have to show on the face of the P&L. After all the items they lined up in the P&L, then you have to say basic earnings per share. So much. What is basic earnings per share? The residue available for the equity shareholders, or in other terms, PAT minus preference dividend, if any, in the numerator. And in the denominator, you have weighted average number of equity shares outstanding.
Unmute பண்ணலாம் கேக்குமா?
Was it a question? Can I continue?
Yes, sir. Yes, sir. There is small interruption.
Right.
You can continue.
Okay, no problem. Yeah, so AIS 20, we have to disclose that at the breakup, you have to give in the notes on accounts. So, but they don't have to calculate diluted earnings per diluted equity. When will that come? That will come when you have convertible debentures. Debentures which are convertible into equity. Preference shares that are convertible into equity. They have a dilutive effect. Sometimes an anti-dilutive effect also. But then diluted earnings per share has to be calculated. When am I audible, Murugesan sir?
Yes, sir, audible, sir.
So what's happening is I have 2 SIM cards. So when the call is coming on the first SIM, I'm connected on SIM 2. I'm tethering now. The Wi-Fi, the hotel is not good. So that's the time when I get a call, this is happening. So I cannot put it on airplane mode also. Let me see.
No issue, sir. No problem, sir.
Yeah, okay. So this we have seen, no proposed dividend because I was talking about Senthil sir finalizing this audit and board wants to recommend a dividend. So earlier what we used to do was, okay, dividend, if it is there, a dividend recommended now, we would go back to 31st March 21 and make a provision. We used to call it, the seniors, we all learned it as a P&L appropriation account. Now that is not there. We appropriate in the P&L itself in the vertical form. We have, or in the notes on reserves and surplus, we show it as a dividend proposed. But with this amendment, AS4 says that the recommendation of dividend by the board in a board meeting is not an adjusting event. Therefore, that should not be provided for as on 31st March. Sorry. Should not be provided for 31st March. Just give me a minute. Yeah. So we will not make any provision, but in the notes on accounts, we'll have to say that, not in the board's report, the notes on account, we have to say that a dividend is being recommended. It will be accounted only in 21-22, which is when it is finally declared and paid in the annual general meeting. Depreciation standard is withdrawn. I did mention it is now in paragraph 40 to 60 of AS 10. There's no AS 6 anymore. Associates and joint ventures not to be consolidated. This is something technical. When Companies Act 2013 came, they said financial statements, including consolidated financial statements, should be filed with the ROC every year. And unfortunately made a statement that subsidiaries would include joint ventures and associates. So we were all confused. How do we consolidate? Then they said, clarified in the Companies Amendment Rules, Accounting Standard Amendments 2016, sorry, that you don't consolidate. It's enough if you comply with AS 23 and 27, the respective standards in the case of associates and joint ventures, respectively. That's slightly technical. Okay, let's move faster. Certs AS 15, certs and madams. AS 15 is the standard on employee benefits. Many of us are making mistakes here. I know in Tirupur, we have companies with a large number of employees. The hosiery companies, the companies which are dying, and all those things. So actuarial valuation, let's understand, if you are a private limited company, if you are a company, irrespective of the number of employees, actuarial valuation is mandatory. If actuarial valuation is not done, if companies make its own computation, fine, but the auditor has to qualify in this report. When we come to that point, we'll discuss further. Actuarial valuation is mandatory. Please be clear on that. Then the next question is, okay, I do actuarial valuation for the first time. I have 80 employees who have completed 5 years. Some of them have completed 5 years, some of them are completing it. And I've used the service of an actuary, and he's asking me to say that my liability is 12 lakhs. My accumulated liability is hypothetical, let's say 25 lakhs. So I make a provision in my P&L, debiting P&L and crediting provision for gratuity, right? It is not tax as admissible, 40 or 9 or whatever, it is a disallowance. So gratuity is allowed only when it is paid, right? So when am I with 25 lakhs, I have an accumulated liability. So I'm having reasonably cash rich. So I'm asking this question, the company would ask, should we not have a sinking fund kind of thing, a reserve, so that instead of having this to become payable, if 20-30 employees decide to en masse, discontinue and go, or they superannuate in a particular year, should we not have a funding? It makes sense. So you may fund it also. That is what LIC group gratuity scheme is for. One example, insurers would fund it. If it is funded, funding is not mandatory. You can decide not to also. But if it's funded, please listen. In addition to the accruing liability of gratuity year over year, if there's a depletion in the value of the plan asset, what is plan asset? The assets in which the insurer would invest our amounts in. The amount that we pay would invest that in plan assets. If the value of the plan assets deplete because of fluctuations in the market or crash in the market, as we have seen because when COVID came. But today, look at the capital market. We will discuss that after the slide is over. Primary market, secondary market is all, I think it's on a market frenzy. It's on fire. One has to be extremely careful. A technical correction has to happen. Look at the IPO of Zomato. I personally and professionally feel that there is no business in food delivery. There is no business in food delivery. No food delivery business is making profits. Zomato has not made profits. 1920 Zomato results are turnover of 2,750 crores and loss of 2,500 crores. Loss of 2,500 crores. Okay. So still the issue is getting oversubscribed 44 times. 9,400 crores issue size. So this is really a frenzy. People like learned experts like C. Rangarajan had warned that this is not realistic. This cannot sustain. The market is overheated. Also, again, I'm quoting Mohan R. Levy from Bangalore. If you have reading the business line, I do regularly. I read a Malayalam daily and I study the business line every day for half an hour every morning. So there he has written that this is all not maintainable. Valuations are overdue for revaluation rather. Anyway, that's a different story. So depletion plan assets can happen. Therefore, the depletion the plan assets should also be provided for, or extra hit you have to take in the P&L account. Where did I go? AS 15, AS 26 new chair. But before the AS 22 also, I think we should mention deferred taxation. Today we have a big issue. Going concern is at stake for many of our clients. They're finding it difficult to pull on. Okay. So if going concern and there are no possibilities of future losses, to what extent can you recognize deferred tax assets? Particularly those represented by unabsorbed losses and depreciation. You all agree with me that unabsorbed losses and depreciation would result in you're all there, right? In between, I thought I lost connection. Okay. So the slide is visible, Sandil sir?
Not, sir, not visible, sir.
Not visible now?
Yeah, yes, sir, not visible.
Just got disconnected now, or for some time it was not visible?
Till not visible, sir. After disconnecting that, you connected, not visible, sir.
Last 10 minutes, it is not visible.
Not visible, sir.
Oh my God, somebody should have alerted me. No, I think that's okay. Let me see. Because I felt a disconnect in between. So that's why I was rechecking with you. Just give me a minute. Share screen. Yes, this is my share screen.
Yeah, now visible, sir.
Okay. I will make it this way. Yeah, SMC we had discussed, of course, this is, anyway, I'm sharing the slide with the branch. So in case you have missed out on a few slides, don't worry. I would request the branch to share with the participants. And also, if you have the good practice of putting it on the website of the branch, it would be nice. Not because it's done by me. If it's useful, you can do that. Okay, I will just run through. This we are discussing, just completed our discussions. Yeah, actuarial valuation, and we were into AS6. But before going into AS6, I want to discuss on AS22. All of you agree with me that unabsorbed losses and depreciation. Losses if your return is filed on time, etc., eligible for carry forward, and that will result in a deferred tax asset. But if there are no possibility of a future profits for the foreseeable future, we should not recognize deferred tax assets. As a measure of accounting conservatism, as a immense measure of prudence, which we are trained to live with and deal with. Therefore, that is something, and only if unabsorbed loss and depreciation related DTA should be recognized only if there is virtual certainty about future profits. Virtual certainty. All other cases, it is reasonable certainty. What is virtual certainty? Virtual certainty is where there is reliable conclusive evidence. My company has not been doing well. For example, a company in Tirupur had a lot of problems. They are in a debt trap, they are over leveraged, they are not able to get orders, etc., etc. They're limping. In this condition, there could be many, I don't know. But then, luckily for them, there's a foreign buyer who's come in. A native of Tirupur was settled in the US. When comes back for a holiday, he finds this unit products to be interesting and has a market in the US. So he gets into an agreement saying that I would take so many units, let's say 20,000 units of, either the jogging, what they call it is a suit, jogging suit, or some kind of undergarments. So many units I'll buy. There's a binding contract for 3 years, with which the company would suddenly get, revived, and from red to black it will become. Based on that, we can recognize. Otherwise, deferred tax assets represented by the unabsorbed loss and depreciation should not be recognized. That is about AS 22. AS 26, intangible assets. I did mention, even in depreciation on Schedule 2 does not deal with intangible assets. This is a self-contained standard. There's something called recognition. You have, let's say, we incur some money on research and development. research or developing a product for which we are trying for a copyright or a patent, and trying to get a trademark registered, etc., etc. An outlay on an intangible should be treated as an asset only if recognition criteria is met. Slightly technical, I'll repeat. Only if recognition criteria is met. It means that there should be a commercially viable concept or a product coming out of that, and the entity intends to commercialize that. Only then this will become relevant. Otherwise, it should not be capitalized, it should be expensed. In the result, therefore, there is no deferred revenue expenditure now. Preliminary expenses, though 35D, there's a separate treatment. Preliminary expenses should be written off in the year in which they are incurred or year of incorporation in the P&L. In tax computation, we claim only 35D subject to the monetary ceilings mentioned in the capital employed, project cost, etc., 5% or 2.5%. I'm not too sure. I'm sorry. Miscellaneous expenditure to the extent not written off or adjusted, those heads are not there in the balance sheet anymore. They were all fictitious assets. We don't have a fictitious life, a fictitious wife. Why have fictitious assets in the balance sheet? So that is AS 26. So some of the important changes. So concluding about accounting standards, I would say let us develop some more familiarity on accounting standards. Ind AS applicability is only for larger companies. So for most of my colleagues who are there, 43 of them as of now, on screen with us, virtually with us, majority of our clients are still under the accounting standards regime. Ind AS has not become applicable for them. Given that, I think we should learn more and apply more of accounting standards in the presentation of financial statements, or rather helping the managements of smaller companies who do not have the internal mechanism, internal capabilities, resources, I would say in one word, the internal muscle to prepare financial statements in compliance with Schedule 3, AS, all those things. When we help them, yes, let us be more aware about accounting standards. So apply accounting standards. Very important standards, inventory valuation, foreign exchange fluctuations, all those things one has to really keep in mind the latest changes and keep track of these changes. Some of us who are in academics are forced to regularly refer, do more of reading. And one more thing I would suggest here is that yesterday, I don't know, in this session where Patagram did a thing where I see organizing programs, Ernakulam being a big branch. If there's a GST seminar, for example, seminar on GST, 5 of the partners of the same firm, XYZ firm, all the partners are coming and attending GST. That really makes me sad. Why are they not specializing? Is it okay 1 or maximum 2 should attend GST? Why should everyone learn GST? I've not learned GST. I'm not boasting or bluffing. There's a partner in charge for that. Our junior, he's a partner in charge of GST. And he doesn't get into too many audits and income tax related things or corporate law matters. So specialization has to happen, and therefore we have to move out. So here, why I'm saying this is that we have to reinvent corporate law practice. We have pledged it to company secretaries. Why can't we little more? Today I met a chartered accountant in a place called Punalur, Mr. Makbul Shah, and his daughter, a newly qualified chartered accountant. And I asked her one question. A very charming girl, she qualified very fast. And I asked her one question. You are the daughter of so-and-so, and you are probably become part of the firm. What is the fresh fragrance you are bringing into the firm? Your Bapu or your father has been doing tax work. Doing what is that you can do in this place, a smaller town called this thing? Then she said, I finished forensic audit course and all that. And I said, why not? Because they have corporate clients. I know they have corporate clients. Why don't you get into corporate law practice? Incorporation to compliance to a lot of things which we can do. Of course, there's a restriction of Section 144 under the Companies Act. I said that area you should specialize instead of doing purely or just continuing to do what your dad has been doing for the last maybe 24 years. So every young chartered accountant who is online with this, age is not a major factor, but youngsters should more look at newer areas and try to specialize. That's the time when all these learnings can happen. everyone getting lost in this thing. Everyone, I would say that cursing and on the portal issues really doesn't help. Take life easy also. Enjoy life. Ind AS applicability, having said about accounting standards, Ind AS applicability for information, Ind AS is now applicable for all listed companies, small and big. Unlisted companies with net worth of 250 crore or more. There's a small correction in the slide. NBFCs also, unlisted companies, including NBFCs with net worth of 250 crore or more, only applicable. Again, look at the last clause. Holding, subsidiary, joint venture or associate of the above. You are a small company again in Cochin or Tirupur or Kollam where I'm sitting now. But you are the subsidiary of a larger company in or a listed company in Mumbai. Then to make consolidation sensible, the language should be the same when they get married, when they get merged and combined or glued together. The language should be the same, the literature should be the same. So they should also be. NBFCs also, it's not all NBFCs. Unlisted companies, including NBFCs with net worth of 250 crore or more. I did mention that they're mandatory and the companies.
Voice not clear, sir.
2 minutes on the history of auditing standards. Our institute set up auditing 18 plus 13 standards in auditing, as they were called then. We are just dictums of standards in statutory teeth. Through Sir, am I audible now?
Yes, sir. Audible, sir.
Slide is also visible?
Yes, sir.
Yes, sir.
My sincere apologies. I should be normally doing this in the office, but Koilon here, there is a connectivity issue. But please, I think in the next 10 minutes, we would round up. I think not because of the connectivity issue. I think we'll be topically done and we have a Q&A, not only on these issues, anything that is relevant and related to the profession. So auditing standards are mandatory under 143(9) under the Companies Act. I would only say that total compliance to be ensured if we are not to be caught red-handed, or rather taken to task for non-compliance. I wouldn't say red-handed. Non-compliance is seen very seriously. NFR has started flexing its muscle. National Financial Reporting Authority, set up under 132 of the Act. A few standards which I would like to highlight here. SA 200 is a basic standard. It talks about professional skepticism. I did mention that earlier. Being a little doubting, not taking explanations and documents and people for granted. It's like saying, sir, agreed, sir, we respect your seniority, we trust you, but we still would like to verify. We would like to have a piece of paper for this, documentary evidence. That is, I think we are very shy. We are a little scared sometimes to ask senior management about documentary evidence. They would ask, why you don't trust us? You have been with us for, if that rotation is not happening, we have been with us for so many years. No, sir, the environment is changing. If everything is fine, why not have a piece of paper? We trust you, but still we would like to have this. I think we should keep on insisting. This is professional skepticism and doing deep dives, particularly in the COVID situation. Institute has come out with 6 COVID pronouncements, ASB and ASP. Many of us would not have seen that at all. But the common spirit for information, the common spirit of all those pronouncements is that professional skepticism should stand amplified, particularly considering going concern, considering the value of inventories, the realizable, whether the receivables, whether they would actually be received. whether true and fair would really be vitiated if substantially more provision is not made. N number of questions are. I think we should be more inquisitive, more asking, more doubting. All those things are very, very important. That is what I said 200. LOE is letter of engagement. SA 210. In our office, we do not take up any assignment without a formal appointment letter. It could be sometimes an email also from the appropriate authority. And then the scope is agreed upon. Audit should always, before you start the audit, the letter of engagement should be got signed by the management. It is not my version of the story. It is not Jomon saying this. It is international standards in auditing saying this. It is our account auditing standard saying this, SA 210. Please have this practice of a letter of appointment, letter of engagement. If you do not have one, Google up, you will get it. Or you can see it as an appendix to the SA 210. Just Google up and see SA 210, you will get it. So the new mantra is said, we always used to say that God knows everything. The new mantra is, God doesn't know everything, but Google knows. We Google up for everything. And we sometimes get very interesting results. Sometimes even the Google map misleads us. Last week, Kerala and a family was followed the Google map. They ended up in a forest and they had to call the fire force people to rescue them. So very rarely, but otherwise it's not a frail guide. It's a wonderful thing. Google map or Google, a wonderful thing, no doubt about it. And then we cross-check that, corroborate that with the evidence we have and try to make sure that the same. One danger I'm seeing in Google is that if some of us they have a headache, seeking medical advice on Google, I don't think is really advisable. Many of them get into a lot of problems. For a mild headache, you would start taking all the medicines or sometimes disregard saying that this is very common in the Western world, so I can afford to. And the health profile of chartered accountants have to really, really better. Many of us have health problems, sedentary life, lack of exercise, stress, very, very, very important, very, very disturbing, that is work stress. I was not on social media till 5 months back. I have a Facebook. I recently have Facebook. That's for my elections. But the other one that's being managed by my partner, I do not know how to set up a Facebook, and I don't see also. WhatsApp, yes, WhatsApp I have gotten 6 months back. But the mails which are flying, the messages which are flying around is really saddening. If I normally disconnect by 10 o'clock. If that doesn't happen, you forget at 11:30, you have a beep and you're looking at an issue on the portal. 4:30, sometimes you wake up with a beep and know that, CFSS has been extended. Should we work that much, really? I don't know. I have not worked like that. In my office, 5:30, the students are checked out. 6 o'clock, it's the lights off. It's a 5-day week for students. We have 55 students in our Cochin office, about 20 in our Trivandrum office. It's a culture which we are trying to develop. No habitual late sitting. No client has gone away from us, except for very few. Last season, 19-20 financial year, because of COVID, etc., 2 Sundays we would have worked, 2 Sundays. But otherwise, it's for partners also Saturday. It's a casual dress, half day, and students are given a 5-day week. Things are possible. So not staying from this point. So letter of engagement, very, very important. So work documentation. We have heard many senior chartered accountants saying, particularly if those belong to larger firms, saying that work not documented is work not done. SA 230, audit program. So it's SA 300, larger audits, we must have an audit program. Do not reinvent. You can go to you can Google up or you go to our website, jvr-cs.com. We have a company audit program. Different audit programs, manufacturing company, service company, IT company, trading company, all of them we need to customize audit programs. Let us have that. Auditing standards, these are all mandatory auditing standards. Mandatory not only by the institute, mandatory by the under the Companies Act as well. Risk assessment, SA 315. See, we should understand an entity. First time when we do an audit, we go around, we meet the people, we ask questions, refer to current year, previous year financial statements, communicate with the previous auditors, what are the risky areas, auditor's perspective, ending up giving an inappropriate opinion. It cannot happen. So evaluate the business, do a lot of discussions. We should gain entity-specific, industry-specific knowledge and relate that to a macroeconomic environment where, for example, real estate sector is doing bad. Tourism is not doing good at all. Kerala, there are 33,000 restaurants which have been closed. close to 500, 600 huge properties are up for sale. If there are takers, get in touch with me. If somebody in Tirupur wants to do tourism business in Kerala, once COVID goes, a lot of properties are for distress sale now. Across the country it is, but Kerala tourism, again, houseboats, many of them, they're not able to sustain. So a lot of issues are happening. Okay. Audit evidence is risk assessment, that's something. Audit evidence, sufficient appropriate evidence. Quantity and quality of evidence we should collect, in that very, very, very important. Going concern, it's a big concern now. Basic accounting assumption, but we are not too sure whether concerns would go on in the foreseeable future because of the issues, financial issues, all those things. Letter of representation, very important standard, SA 580, written representations. During the course of an audit, the management would at various levels make assertions. And the IRCA sir, is it there? IRCA sir, it is there. Are you doing it every month? We are doing it every month. Where is the document? Get that all in writing through letter of representation. Management representation, it's called. Informed reporting. Informed reporting we have to do. That is with reference to CARO and internal financial controls. This is a comparison of SA 700. Now we have to see that the opinion comes first. Base of opinion paragraph. Do refer SA 700. So do refer SA 700. Make sure that the audit reports are in the right format. We are covering all the subheads or rather paragraphs which are required to be covered. CARO 2016, yes, CARO 2016, we have key aspects. I did mention earlier about the title of, should be the name of the company, physical verification of fixed assets and inventory. In fact, there is a standard on auditing 501, which requires the auditor to be physically present or send responsible people to oversee physical verification of inventory. Many of us are not doing it. But ensured or possible, we can do that. Sir, am I audible?
Yes, sir, audible, sir.
Yeah. Loans, default utilization, we have seen term loans, particularly this year when we report, there have been moratoriums, extensions, etc. But subject to that, if that's not availed, if moratorium and reschedulements have not been availed, then there could be a lot of defaults this year. Related party transactions, AS 18, and also in CARO, there's a specific reporting requirement. We sometimes are inconsistent in the notes we have to give, AS 18 notes we have to give, CARO we have to give, and not giving anything here in 48(2)B under the 3CD report we will give. It could be an inconsistency. So there, the holistic picture you have to understand and do it. New reporting requirement, most of them I think familiar, I think we will run faster. But look at IFC reporting, internal financial control reporting. The institute finally said that it is only ICOFA, internal controls over financial reporting. The auditor should not be asked to report on the whole government of internal financial controls, which is beyond the scope of an audit, given the time frame, etc. The scope of an audit cannot be stretched and extended to that extent. And therefore, it's only ICOFR, ICOFR, internal controls over financial reporting. But if you are a small company, or your turnover is less than 50 crores and borrowings less than 25 crores, you don't have to do IFC reporting, provided you are fully compliant, which means that you have no pendency with the ROC, your MGT 7, which is your annual return, your AOC 4, along with that, you file the audited accounts, annual accounts. Those things have, if they are all filed, then you don't have to do the IFC reporting. The auditor has to take note of this. The 4 thick pages in addition to the main report, and the CARO can be avoided in such cases. Impact of pending litigations on financial position, new reporting requirements. Provision as required by accounting standards for material foreseeable losses on long-term contracts, including derivatives. Now, we had a client who came from Dubai to set up a project office to do an assignment with the Kochi refinery, which took up a 20,000 crore expansion. My friend Prasad Panika was in charge of the whole thing. And this company came to us to set up a project office. We did that. and unfortunately quoted low. And 5-year contract at the end of year 2, it was clear that the final outcome of the contract would be a huge loss. EIS 7 requires that such a contract clause should be provided, or once it is realized, it should be recognized in year 2 itself. We cannot wait for 5 years to be completed and the loss to be provided for. So this is one example which I'm reminded of when we talk about this particular one. If that's not done, the auditor will have to report saying that EIS 7 to that extent has not been complied with. COVID pronouncements, yes. The joint advisory which came in on the impact of coronavirus and financial reporting, etc. Going concern, I did mention, let us take it with a pinch of salt, and if need be, pinch of pepper as well, and be very doubtful, be a little more skeptical on going concern. Subsequent events, post to March, that was more for March 2020. Now here, this year we had March 21, normalcy had kind of been regained, and we went into lockdown in towards the end of April. So again, based on that, we have to keep in mind these considerations. Look at the second bullet point. Management should assess the impact of continue as a going concern. Write down of inventories to decline in selling prices is sales. One has to be very careful. Fixed to production overheads. That's slightly technical because I do not do it on the basis of sensibly based on there's no, and sometimes not even for that in the case of valuation of work in progress, etc. Work in progress. But here it can happen. It can happen that due to COVID and the demand for such products probably have faded out. Then probably the normal capacity itself would get reduced, or rather has to be reduced substantially. Accounting for taxes on income, we have discussed. Now with that, my dear colleagues, I'm topically done. Let me take 5 minutes to explain, or rather share with you something which I consider is very important for every one of us, particularly for those of us for whom growth is still part of our agenda. We want to be visible, we want to grow as an audit firm, and we want to grow in size. The baseline of our firm, or rather where I'm managing partner, I can say my firm, the baseline of our firm is bigger, better, bolder. Bigger is aspiring to grow in size, deliverables, capabilities, bigger. Better is improving the way we do things, the way we attire, the way we deal with clients, the way we comply with standards. All those things are very, very important. There is every day offers a scope to improve ourselves. And COVID times, lockdown times have made us to look into ourselves substantially with more of a focus and say that where am I? And am I in a rat race? Should I run this fast? There are a lot of questions which you have asked. So improve, that is bigger, better. Bolder is like, okay, we have an issue, but for the time being, should we go for an adjacent room which is coming up for letting out? Should we take that also? Maybe for future expansion. Maybe it is not very highly affordable now, but still, or adding a partner, opening a new branch, a lot of things which we can talk about. So that is bigger, better, bolder. In that context, I would only say that one of the COVID lessons are been very, very clear. I think the indications in here. Let's have a better infrastructure for our offices. Many of us as chartered accountants, we have good houses, mansions, I would say, luxury cars. But then when it comes to office, I think, unfortunately to say, many of us, the ambience and the environment is suboptimal. So I would request every one of you to develop a better infrastructure. For us, for the people who are working with us, including the washroom hygienes and the private washrooms for girls, all those things. I 2006, Manoharan sir, when he was president, he wrote in his presidential message that 10% of the gross has to be reinvested in infrastructure. I'm not able to quantify to that extent, but I would say continuously we should endeavor to have better infrastructure. And for every one of us, the waking hours, more of our waking hours is spent in office, not in our houses. And how we go back home late, and then we sleep most of the time we at home. So very important. Technology, particularly when lockdown came all of a sudden, we asked ourselves, will we be able to manage? Everyone is talking about work from home. Can I get work from home? Can I ask my students? That's possible. And let's have good people, more students if possible, and good processes. My office, again, I'm not boasting too much of that. I'm saying that it took effort. It took efforts to make that student-friendly form, a student-centric form. So other than the receptionist, the office boy, and the cleaning lady, and 2 trainees, our entire office is managed, or the work is executed by article students, article assistants. That's a possible culture we should essentially work on. Processes, of course, peer review, we got a peer review, and peer review got done, we pass a peer review, and the peer review certificate is displayed in the waiting area of the office. And we did send a mail to our clients, to our clients, saying that we have been recognized. The ICA has given us the peer review certificate, which is a proof that our processes are mature, we are complying with standards, etc., etc. Well-worded letter, and something like a corporate communication video. These are small things which we can do in brand building, and so much required when we diversify and let the client know that what we are capable of, instead of just clicking on to tax practice, which is slowly fading away. Billing and collection, my dear colleagues, we are the only industry which gives 12 months free credit. You know who a strict auditor is? Sendil sir is smiling. Sir, a strict auditor is one who doesn't do this year's audit before getting last year's fees. What does that mean? We are giving 12 months credit. And in banking and financial management, any debt which is more than 3 months is said to be very unhealthy, not considered for current ratio. Why are we doing this? Maybe existing clients, Murugesan sir has also switched on his video and listening. And the same problem. I too have the problem. How to get over that? Sir, only I would say that all the clients slowly we can change. But a new client is coming to Murugesan sir because somebody told him you go to Auditor Murugesan. Advice timely. So he comes with a certain rating of you. We are not going after clients. And then we start underplaying. Now I'm not talking about chairman. I'm talking about everyone. We start underplaying, say the client has come. How much can we charge? Will he feel bad? All those things. And we don't agree also. We have something in mind. The client may want it free. We have to talk that out and have a letter of engagement. So new clients, new rules. I repeat for every one of you, I request new clients, new rules. A client is coming to you because he wants something done. A project report. Somebody refers a client to me for doing a feasibility report or a business valuation report. Very few people in Cochin do that. So that itself gives me an advantage in saying that a valuation report, the minimum that we charge is, let's say, 2 lakhs. Then he would say that we are a small company, we are a startup and all that, and that's a bargain. So some kind of reduction happens. Too much of a startup, sometimes in the industry of if the project is good, sometimes they're offered. Sometimes we do it free also. Because that's another issue. That's a human factor, which is completely different from the commercial aspect I'm talking about. Let us not undersell. And these boys, when they come up, they should stay with us and they should come back and say that in our difficult days, we stood by you. Very few cases, maybe. So be prompt in billing, discuss and finalize the amount in advance, bill promptly and collect promptly. I will share my bill format with you. In that it is printed. All our bills are payable immediately. With all that audit clients, we give 15 days credit, 30 days credit. I think there is no debt, no receivable, which is more than, except very few small amount, which is more than due for two months in our receivables because of COVID. Otherwise, it's even less. Anyone can do this. Everyone should do this. That's my request. I'm not getting instructional here. I'm just making a friendly suggestion which should benefit everyone of the profession, everyone in the profession. And younger members, please notice that. You are not, initially, you cannot be very, very choosy about clients. You have to do everything. Sometimes you have to do the extra mile. On the billing a little bit, speak from a higher pedestal. The first generation auditors, some of the seniors may be there. First generation auditors were pandits. They were seen with that kind of respect. With GST and all that, some of us are getting clerical too much. I think we should put a stop there and speak from a stronger wicket. We could have an accounting division or a GST division. There are 1 or 2 people sitting there. And then, that's the way it should do. So financial planning, personal financial planning, many of us are not doing it well. We have had very unfortunate incidents. I'm talking about term insurance, for example. Term insurance. Take term insurance, forget unit-linked plans and SIPs and all that. That is term insurance, very important. Having reasonable reserves. We should do a lot of financial planning and share with your spouses. I do this, I don't know if it's good or bad. I give if it's not monthly, once in 2 months, I give a statement of assets and liabilities to my wife. She's not working. She's a postgraduate rank holder, but opted to be a homemaker. But since she's not working, I should know, what are the things, what are the assets, what are the liabilities. So not because she asked for it, he never asked for it. I volunteered to do that. So for the sake of clarity. And I used to say avoid social media. Now I said cut down on social media to the younger members. And please switch off your mobile at 10:30. Let us not do tax filing after 10:30. And not before 7:30. Let's see whether the sky is going to fall. Never, the sky will never fall. Cut down social, you listen to music, that's fine. And see some troll, but work-related also, I think too much of work is putting a lot of stress on us. In Cochin, I know at least 3-4 chartered accountants who have had major health problems. They're not smokers, they don't drink. It's purely out of work stress. Purely out of work stress, they have developed health problems, ulcer, heart problems. Should we invite that? Should we again disregard that and say that I still work for the guy? I recently had an interaction with a young member in Tamil Nadu. I told him, boss, work is not everything. Your life, your well-being, being happy, being comfortable, being with family, being with kids, being with friends, take a trip. All those things are very, very important. That's something which I think we should be really, really careful about. And also we had a person who was representing one of the big 4 firms in Kerala. He's not a chartered accountant. So he used to run around cutting across borders and doing consulting assignments kind of. He was selling that particular firm in Kerala. And at a very young age, he's much younger to me. I am 54 now. 10 years younger to me, had a massive heart attack. It's not that we are saying that it can happen to anyone, but I'm just looking at the reasons. If you are a heavy smoker, for example, I used to smoke heavily till 2005. I quit smoking and then I feel much healthier. Bernard Shaw famously said, for some of you, if you're smokers, George Bernard Shaw famously said, to stop smoking is so easy. I have done it so many times. So on the story goes. So health is very important and student friendly. When I mentioned that we have 50 plus students, again, what I'm trying to say is that we have to develop an academic culture in our firm. It doesn't happen overnight. The students should be made. End of the day, what happens is, how much ever we try, the new generation, 10%, 15%, there could be indifferent people. There could be dissidents. But for the rest of the 85%, who are the future of the profession, who would be 20 years from now when we are not there sitting on a screen like this or organizing meetings for the institute, delivering lectures for the institute, writing articles in the letter, the training other set of students who are the next generation students. For the rest of the 85%, we have to become student friendly. Always been with the students. I taught for 20 long years. Sandil sir addressed me as having taught 10,000 students. It could be more. It is not the number. It is how many of them you have been able to touch their lives, inspire them. It's very, very important. So the next generation has got a role to play. So let's become more student friendly, develop an academic culture in the firm. Last week, again, I'll take only 1 minute. We had an induction program. This time around, we took 17 new article clerks in this season, 17 new article clerks, 14 of them semi-qualified, 3 waiting for their results. And we did a 1-day induction program for them to make them feel attached to the firm. All the partners, I did a session on introduction and success tips, audit partner on audit, GST partner on GST, and so on. Compliance partner on compliance. One-day program. We invited a young chartered accountant, youth icon, lady chartered accountant, and she inaugurated the program. So one-day program. It felt very good. So there we had a very sumptuous lunch, and then evening we had an informal interaction, feedback, and all that. So a lot of things can be done there. With all that, I think we should, the working organization, our work environment, offices should be happy. 3 days back, let me again share a very personal this thing, which is very touching. Which then I felt a little guilty also, saying that, we are the office manager, or rather the admin. If she is at the reception and she does many things, she has been with us for 15 years, ever since the firm started, so 16 years. And she was reporting some health problems. She said, I'm taking homeo, sometimes Ayurveda. I said, stop all that. Let's see. Then I have a very good physician whom I go for periodic health checkups and all that. Very young doctor, very good. I said, no, you go there. And I sent her in my car with my driver. And she went there, and she was so happy. And this doctor is a very friendly doctor. So we disregard them, and after that, she came back and thanked me. I could see tears in her eyes when she thanked me. And it's a small cost. We footed that cost. And she said, thank you so much, sir. I think the doctor is a very good doctor. Vitamin D deficiency is something which I said. He asked me to discontinue some of the medicines. So the small things which we can do. So I felt happier than her, because the guilt I had was that, why didn't I think about it? 3-4 years, she has been complaining small issues. So 3-4 years back, if I had done this, so it is, at least now I have done, I was feeling happy. A lot of small things we can do. There is more to life than chartered accountancy, I always believe, in helping others, in touching their lives. And this lady, again, her teenage son had a problem, and he was kind of the engineering college student, type of problems he could have. So she and her husband came to my house, and my wife asked me, how do you think you can help them? You are not a psychologist. You cannot do this thing. All we have to do is give them a patient hearing and give some tips and suggest that we would pray. Give them a cup of tea, a hug at the end of when they won't leave, hug, everything will be fine. I'll speak to that boy, bring him. And God's grace, after that, there's some change. And she thinks that it is some magic which worked from my side. It's not. It is God's hands that have worked. But 15-20 minutes for them, it makes sense for them. So I'm not getting preachy anymore. There are a lot of things which we can do. So back to the business companies audit this season. Let us do a better informed audit with more of involvement. Compliance with standards are very, very important. So with that, let me conclude, thanking the Tirupur branch, which is very close to my heart, very close to Kerala also. If Gopal is there, I think once I came for a program, Gopal received me at the airport, and at the railway station, and pleasant memories of Tirupur conference again. My tribute to the inspiring memories of Kansami sir also once again. So thanking the organizers for the opportunity. I would stop now. If there are a few questions, I can take a few questions if it is there. Thank you so much, Murugesan sir and Sendil sir, for the wonderful evening. Thank you.
Yes, sir. Thank you, sir. Thank you for accepting our invitation. Members, if you have any doubts or if you want any clarification, you can ask our speaker. Either you can give it in chat box or you can unmute your mic and you can ask.
Yeah, only very few of us now. So I think it is better to shoot the questions directly.
Yes,
Chat box as of now is empty. So, sir, no questions means the two ways of looking at it. One is that everyone has understood everything.
That's
the other option I don't want to say.
First one, sir.
First one, sir.
First one. Right.
30 more participants are still there, sir. That's why it's a pass first one.
Correct.
Members.
There are no questions. I think we will round up. I have to drive back to Cochin, which will take about 3 hours. I'm not in a hurry. If there are questions, I'm fine. Otherwise, you can give the memento and I'll move.
I think there is no question, sir. So
absolutely no problem.
Yeah. Chairman, can I conclude, Chairman?
Yes, sir.
So, sir, on behalf of our Tirupur branch of SARC of ICA, I extend my heartfelt thanks to our past SARC chairman and today's speaker, CA Jomon K. Charge, for immediately accepted our invitation and addressed our member on the specific topic. Thank you, sir. Even though if you are not in town, you spend time for us and you share your thoughts on the topic audit of private limited companies, which will be very useful for us in the forthcoming audit season. And also you advised our members how we have to change our lifestyle and professional style. So thank you for that also. And I thank all our members who joined for this seminar in this evening. And I also thank our branch staffs who made arrangement for this seminar for conducting in a virtual mode. Thank you all. Thank you especially to the past SARC chairman, Jomon, sir. Thank you, sir. Thank you once again.
Thank you, Sandil. Before I disconnect, I would surely send the presentation right to tirupur@ica.org,
Yes,
and
sir.
you could, depending on this thing, whatever the normal practice, you can share with the members, because in between, due to connectivity, I think some of the slides they're missed out.
Okay, sir.
Thank you,
Sorry,
Murugesan sir. Good night.
Thank you,
Have a
sir.
great
Good
evening.
night,
Sandil
sir.
sir.
Good night,
Bye
sir.
bye.
Good night, sir. Bye.
Bye.